Hello, ladies and gentlemen. Welcome back to another video. The mainstream media is telling us now that retail has exited the GME trade. We will unpack if that is true. Hit the GME model today, take a look at that to see if it truly is broken. And then towards the end of this video, an extremely interesting find that may show some sort of can kick or swap roll potentially on GameStop. So without further ado, this is not financial advice, strictly opinion content. And I'm glad that we all understand that and got that out of the way. So wanted to dive into the video with you guys today and kind of give you more of an unfiltered opinion take today on how I feel about, the price action that we've witnessed over the past few weeks and past few months. This is not going to be a full year in the review look behind. I think this is more of a what is going on right now and what am I personally trying to do to weather this storm, because I'll be the first one to say it. This has been incredibly boring. The volume has been pathetic, and the chart itself just looks like it's in a total state of disarray now, and has for the last, well, really, I think since the second bond offering, excepting for a quick run to 28 for September earnings, and really nothing since then. So, what do I think is going on? Well, I wanted to start first by highlighting this article from the mainstream media here. They are saying that the fear mongering with the headline GameStop plunges 38% from peak as retail exits. So I am going to save you the click. I combed through this article, read it. It's really a degree of slop, and there's nothing backing this up whatsoever. There's no claims about, XYZ have sold out. There's no claims about institutional ownerships. It's really just a sentiment and feel piece. And that got me thinking, hold the phones. Sentiment and feel. Well, sentiment seems to be at an all-time low, which I agree with. I think that is true, but that doesn't mean retail has exited the trade. And for me, this is an investment. This is not necessarily a trade. Now, how do I take advantage of these windows of nothingness? I personally sell covered calls. Let me know in the comments below. Have you exited the trade? Do you even care about GME anymore? Are you into silver now? Is everyone saying, the next big GME squeeze is going to be silver? Let me know what's going on. I'm going to show you some data that is going to at least reinforce my personal opinion and thesis that GME is in a better state than it ever has been today. Which brings me to my first point of zero volume on the stock. And if you watch the 1 minute chart, if you watch the 5 minute chart, if you watch the daily chart, whatever you're looking at, you're going to notice a lot of nothing. And it's been that way since really, I think, September 10th, which was the day after earnings on GME. There's been no volume, and that was at 46 million volume, right? The previous high before that was the second bond offering, which is a whopping 172 million volume. But we've been lucky to crack 10 on a single day since September's earnings, which if you watch the chart, you'll know it's extremely boring. It doesn't tell the story of what's going on with GameStop. So when I see articles like this claiming that it's over and the sky's falling and that we all need to pack up and move on, I get more bullish. And let me show you why. The turnaround stats right here from Jerson on the GME subreddit. Store count, and this is on the left-hand side, the pre-turnaround fiscal year of 2020 versus the current status here, trailing 12-month data as of December 2025. So you'll notice on the left-hand side that the fiscal year of 2020, the store count was higher with more than 1,000 stores compared to the previous 12 months now. That's fine. I mean, of course, revenue is going to be higher, which you'll see there too on the second line, but 5.1 billion on 4,800 stores versus 3.8 billion on 3,200 stores. Not that bad. And then I think that's where you got that kind of misconception from their most previous quarter 3 of 2025 for GME, where I thought the report was pretty good, excepting for the miss on revenue, which can be explained by exactly what Ryan Cohen said he was going to do, which was increase profitability. Then we have our operating income minus 237 million in fiscal year of 2020 versus plus 177 million trailing 12-month 2025. Interest income minus 32 million compared to 241 million. Now, that helps because of what Ryan Cohen did, which is dilute. And in the form of bonds, in the form of warrants, in the form of at the market offerings for GME shares, we now have $241 million plus of interest income. So yes, that comes with a cost. It's not free to do this. There's no such thing as free money, really, but 241 million positive versus minus 32 million is the sign of a safe company, correct? Net income, which is the best number on here, it was minus 215 million negative versus plus 422 million. Stockholders equity 0.4 billion versus green 5.3 billion. Earnings per share close to $1 where it was minus $3.30. And then book value is now $11.84 and $6.72 was it in fiscal year 2020 when it ran all the way up to $420, $500, however you want to price it. So what does that say? It says that this is a turnaround story and that the investment today is probably a lot more attractive than it was in 2020. If we look at institutional ownership, that corroborates that as well, where if you go back to December of 2020 on the left-hand side of your screen, you'll see a decent amount of institutional ownership followed by everyone exiting during the January 2021 event. But now if you look on the right, it's almost at all-time highs. There was a slight decrease from the latest reports, but they're still sky high. Why? Because Ryan Cohen has made the business profitable. Why? Because if, and that's a big if they increase revenue, this is going to be a potentially magnificent all-time story in stock market history. But you wouldn't know that if you're reading the mainstream media articles. You wouldn't know that if you're just looking at volume, because it would appear that there's nothing going on with this stock. I don't think that's true. And I think we can look at other, theories. We can look at, the silver squeeze and swaps. But if you just live grounded in today's reality, what can I assure myself of with my investment in GME? It's that the business is better today than it was in January of 2021. That is, to me, a confirmed fact. Now, is the shares outstanding higher? Yes. Are they better with hiding short interest through XRT and the somewhat newly created GMEU? That is also true. Are they kicking fails to deliver through various ETFs that eventually pop up on the underlying GME? That is confirmed in the BRNO research paper T plus 35 confirmation of fails to deliver through ETFs on GME. So those things are all true. We know all of those things. So then why is sentiment so low? It's because, in my opinion, which is an opinion, it's manufactured. They don't want you going near this thing. It's already clearly a problem for them, which is speculation. And the swaps, I believe, are in the notional amount of exceeding $2.5 or so billion each. To me, that's what the real story is. When is it going to come due? I couldn't tell you. To me, it doesn't matter because of what Ryan Cohen and leadership have done for this company. If they can increase revenue, you're going to see something magnificent. Now, we can turn our attention to a theory from Reefer Refugee that I've been following, and it's looking better and better and better. But we don't need theories. And theories like the silver video I did, like the swap roll kind of estimating time windows that I try and do, those things in the grand scheme of things, yes, they matter for actual price appreciation of the stock. But above all else, you know what matters way more than that is that Ryan Cohen's actually turned the numbers around, and we saw that with the data. So let's just take a look at this theory by Reefer Refugee, just because I think it's interesting, and I think it should temper expectations for people as well. But we're looking at the 2020 macro position here. You can see, the pattern on GME. Obviously, it had this huge move up. This came from 60 cents all the way up to $1.65, and then kind of put in that like cat ears here pattern with one blow off top, obviously with settlement a little bit later, followed by an absolute terrible slam down price window. And in that price window, I did want to make note of this too. That's where you saw Michael Burry, really active activist kind of investor in GME. You saw Roaring Kitty start to make his online persona and really be beating the drum for this investment. That was in that window of strict drawdown where there was nothing going on with the stock. Okay. It's very similar to how it is now. Obviously, Michael Burry's back to Roaring Kitty's not back, but he doesn't need to come back. I need to make another video on this. He does not need to come back for GME price action. I understand why people say that, because they take his posting and which directly affects the algorithm. That is true, but he doesn't need to come back. Ryan Cohen is the one steering this ship. Roaring Kitty will come back and it will make everyone feel safe and secure about their investment. But if you can read the numbers, I personally feel safe and secure as well. So if we look at the image on the right-hand side now, you can still see that same kind of pattern. Huge blow off top there to $80, slam back down, obviously, peak back up around 60-ish, and then kind of just trade in this little, I guess you could call it nothingness, right? I mean, moves to from 20 to 35 are huge 70-ish% moves, which is huge. And you can make money off of those. If I would have bought and sold in those cycles, yes, I would have had to pay the tax man, but you could make money doing that. I'm personally just doing covered calls, but I get the rationale there. Anyway, if you look where the blue circle is and the kind of this straight shot down, now this is a little bit different because of the bond offering there with the slam down, but you can see the exact same kind of pattern playing out. And they're saying that little V down there is the window that you want to see buying in before an ultimate appreciation in price. So it still looks like that window is the lowest point would be $15.94. Another low would be $17.57. And then kind of the top of the buy zone in their eyes is around $19, $18.69 to be specific. So we would have some room down to go. And let's measure that move down. And that would still be 20% down. But I can't emphasize enough, this is simply just a theory. And wouldn't it be way too obvious for them to be repeating the same fractal from kind of 2019 through 2020 into the ultimate January 2021 event? I mean, I just think that would be way too ridiculous. Now, if it is repeating and they can't control it and it's kind of predestined, that would be hilarious if that were Roaring Kitty's thesis all along. But I think Roaring Kitty, everything that I've read, everything that I've watched, everything that I've combed through the actual findings myself and the research papers and the fails to deliver and FINRA deferral windows, rules, everything regarding that, it seems like he just had a really good understanding of when there's forced closures of fails to deliver. And that, I'm not taking anything away from him at all. In fact, it's genius. He's a genius with extreme high attention to detail to understand these things perfectly in the way he does. I never really thought that he would be a fractal trader, and I'm not ripping fractals. I think when I'm trying to live in reality, which is the theme of this video, I think to myself that would be far too obvious. But I do like looking at these things because I think it provides some level of, reassurance for people that aren't, really good with numbers, or they don't understand the turnaround story, or they see the dilutions as a terrible thing. It's a terrible thing if you're a squeeze only investor. If you're here for a turnaround story, the dilutions are actually benefiting shareholder value at the end of the day, because Ryan Cohen's mission, as he stated in his letter, which I reference all the time, was to increase profitability. But you can see a very similar range here that GME is in. You can see this pattern playing out really well. You kind of have that little uptrend, you have that wick, and then you have this slam down, a little blow off top there, and then proceeding to kind of go into that rounding formation there. It looks like this is playing out pretty well, which, could just be at the end of the day a coincidence. They could be trying to throw people for a loop. But, to get to their kind of final slide here, it looks very, very similar, with a few of these ranges a little bit more pronounced. So when I go back to kind of May of 2024 and I was reading every single post on Superstonk, I was extremely engaged. I was thinking, I was, speculating in my mind, what could this be? What could Roaring Kitty have seen? And one of the most prominent theories was this kind of, the fractal is repeating. It's just happening faster. Well, now I think in this case, it might be a little bit slower, or, if we have kind of one more little down leg to go here, it could even be faster, I suppose, if it really zooms up in January. But I don't know. And I would caution anybody that's putting a lot of emphasis on this, just say, hey, when you zoom out and you look at the actual story that's unfolding here, the numbers look really good. And there's no disputing that. I'm not trying to say there's not a bearish argument. There is absolutely a bearish argument to any investment, period. It's just that this story looks a lot safer than it did when it did squeeze, and there's still a lot of anomalies going on behind the scenes, whether you believe them or not, even though some are in the data for you to see. It looks pretty compelling. So we'll leave the fractal there. You guys, I'm really interested in some of this data that I'm seeing too. And probably the most interesting thing to me in this video is something that this person found right here, and I'll tell you why. So perhaps we are seeing the first mechanical ripples of Ryan Cohen's share recall. Now, I do not think Ryan Cohen is doing this. He would face legal scrutiny and most likely penalty, right? Because when the bad guys lose, it's the good guy that gets penalized. Always. That's how history is. Read more history if you don't understand that. With that said, this post right here, the borrow fee absolutely skyrocketing. What happened? Well, it got me thinking. The fee rate jumps up to $1% or 1.60%, right? Why? And you can see it perfectly on this chart exchange graph here. You see the huge green candle. Well, when did it last happen? Okay, well, that was on December 26th. It just skyrockets up to 2%. Well, it did the same thing a month before on November 28th. And it did the same thing almost exactly 1 month before on October 27th. And then it did the same exact thing on September 29, almost exactly 1 month before that. What's going on? Listen, if you don't want to do the tinfoil, that's fine. But the borrow fee consistently rising extremely high. When I'm talking extremely high, by the way, I mean in terms of a percentage move. That's a few 100% move up, okay, each time. When that happens, staggered out almost perfectly between 28 and 35 trading days, my first thought is a can kick. My first thought is you can see them kicking the can through this data. If you don't believe that, that's perfectly fine. I would assume that this is the fails to deliver from the 47 million plus volume. We'll go back to this point in the video that you had on September earnings. I pulled up the weekly here because it's just easier to see that this was the point in time you had just come out of the swap zone. You got immediate relief. Why would they kick the can here? Because it looks like there's 1, 2, 3, 4, maybe more swaps in this area. They wouldn't want to release pressure in this time. I think that's the most compelling thing. And when I hear people say, or I hear the trolls in the comments, which keep commenting, by the way, I love it. You can be bearish. You're welcome to be bearish. I love the discussion, though. I think the bears are absolutely fools, but that's neither here nor there. The point is that if this is happening and we are witnessing a can kick in the borrow fee, eventually you have to pay up. You could do this, I suppose, in perpetuity, but you have to pay to do it. Someone's going to be on the hook for this. And if this is a margin situation or cash gets deposited in their account, it's interesting. And it's certainly, I think to put a bow on today's video, my personal thesis is that the numbers are better. Ryan Cohen, I trust wholeheartedly because he has skin in the game. He's not just on the sidelines. He's not some passive investor that's running the company, taking a huge bloated salary and saying, oh, we got to create shareholder value, even though I make $10+ million a year with $5 million in stock compensation. No, he's not taking a dime. He put his own personal money in the company. So those two things, the business turnaround plus leadership, that's enough for me to sleep easy at night. Will there always be shenanigans in the market? Yes. Look what's going on with SLV. I showed it to you guys yesterday. The fails to deliver. You can redeem SLV for physical silver. There always is going to be someone that knows the rules better and that uses them to, you can call it scam, you can call it whatever you want, but it's in the rules and they're doing it. And it's maddening as all heck, but it is what it is. That's not my thesis. This is only adds to the excitement that we could potentially see for my personal thesis to play out. So I hope that helps. I hope everyone's living in reality. I hope everyone's still feeling, if they want to, bullish. If you're bearish, please let me know in the comments for either way, because I certainly don't think that headline that retail has exited the trade is accurate.